Good morning, everyone. Welcome to today's Frontier Opening Bell. Joshua Debisi from Vetiva Capital Management, Ali Kansachu in Nairobi from Rich Frontiers Management, and Akintude Sulaiman from Greenwich Merchant Bank. Thank you, gentlemen, for coming on the show this morning. We appreciate it. Let's get the show started. On the equities front, the Nigerian market continued to soften for the third trading day of the week. The Ivorian market went down sharply 1.11%. Ghana stock market, we'll see what happens from today. The incumbent president, Nana Akufo-Addo, is back, retains his presidency, by the way. Egypt's stock market flattened 0.01%. Kenya just flat as well, or as we get the news from Safaricom, not so particularly sweet story for this telco giant. In South Africa's GSE, 0.22%. South African GSE index now at the doorstep of 60,000 in reading. And stories coming through say South Africa's and Africa's telecom giant is being sued massively by those whose families are wounded or killed in Afghanistan and Iraq because of the deals that the telco giant had with the Al-Qaeda and Taliban against targeting his towers in the Middle East. Of course, it's a story that those folks want those cases handled in the US. That's the news coming through this morning from MTN. But Kenya is getting its first return of 444 million shillings in stolen assets from abroad. Congratulations. Looks like Nigerians got a whole lot more than you folks. It's just that we don't know who's responsible for these stolen assets. Maybe Ali has an idea. Nation Media has gotten approval from the market authorities, that the capital market authority, to issue 18.85 million bond. I&M Holdings has gotten the okay of the directors or the shareholders to buy Orient Bank of Uganda. Standard Chartered, not good news. The 25% profit after tax decline outlook for the full year. And Tanzanian Breweries, dividend 160 Tanzanian shillings per share, December the 17th. That's a Christmas bonus there for the shareholders. Ali, let's follow the money. Where is this money coming from, and who's likely responsible for this stolen fund?
So these funds are emanating from the United Kingdom. This was an announcement made by the British High Commissioner, Jane Marriott, in line with a more coercive approach to tracking illicit funds abroad and bringing them back. The origin of these funds is I'm not sure exactly, but there have been a number of stories. Kenya Power many years ago was one. But I think this is signaling that Western governments are increasingly keen on being seen to be assisting African governments in retrieving illicit gains from abroad. So it's a welcome development. It's only $4.2 million, but it's, I think, the signal which counts for most. Nation Media gets the CMA nod to issue 18.85 million bonus shares. Nation Media is the preeminent media company in East Africa, NTV, the Daily Nation, and many more radio assets. But has had a very torrid time. We've had this increasing pivot to digital. Nation's core business was really the Daily Nation, the print paper. They're exploring ways of pivoting to digital, but we're still in that interregnum period where we're seeing declining revenues now for 5 straight years. And I think what this is all about is protecting cash flow and giving long-suffering shareholders some bonus shares and encouragement that way. But the media industry globally is going through that Schumpeter moment, and I think Nation has been caught in the crossfire as well. I&M Holdings, bolt-on acquisition, Orient Bank Uganda. This is the trend we're seeing across Africa. Even your banks have been doing the same. Standard Chartered issued a profits warning, but frankly, Barson, I think every single bank that is listed at the Nairobi Stock Exchange, given what we've seen through the 9 months, will be issuing a profits warning. So I think StanChart just getting ahead of that curve a little bit. Tanzania Breweries okaying a dividend of 160 shillings a share. As you said, just before Christmas, good timing on their part. That's a solid business over there in Tanzania. If I could just touch on something I saw come across the social media, Sudan has been given a clean bill of health with respect to religious tolerance by the United States, and that will be a small step in the direction of taking them off the supporters of terrorism list, which will be very helpful in terms of moving the country forward and accessing multilateral funds. So I think that's a positive statement to be taken in the context of some serious reforms by Prime Minister Handok.
A quick one before you log off from East Africa, Ali, is Safaricom earnings that's coming through this morning. How do you think the market will take this major decline, and what's the underbelly of these telco giants reporting this negative profits side?
So firstly, let me say Safaricom has been at its close at a record high earlier this week. These results came out in early November, and this was MPESA, which is the the golden goose, the goose that lays the golden eggs. But you will recall that the central bank made money transfers of amounts less than $10 free on the Safaricom network, on the M-PESA network, and essentially that led to a decline in revenues at M-PESA of 14.5%. Volumes increased considerably as people increased the wallet size during the pandemic period. And what Mr. Ndegwa, the Chief Executive Officer, is seeking to do is, I think, put pressure on the central bank so that they do not extend this free period. And I think that's what the interview that you're referencing in Reuters was all about, telling the central bank, okay, we've done our share, don't squeeze us anymore. And I think that's the messaging that I take away. But the share price is performing, and the point to take away is in the medium term, given the increased volumes we've seen, it means that the business is going to be very profitable once it normalizes the pricing structure.
Thank you so much, Ali. The banking sector, like you talked about, the StanChart Chartered of Kenya giving profit warning is one big story, and Nigeria is not an exception. That's speaking to the Moody's Investor Services report of yesterday, which of course Joshua Debisi and Akintunde Sulaiman will touch on in this conversation. Because of its significance, as it were, with the banking sector, not just in Nigeria, but around the continent. But in just about 2 hours from now, the World Bank is launching the Nigeria's Development Update Report, which comes twice a year, January and December. The idea for the latest report comes from COVID-19 response by the government, try to analyze what the Nigerian government has done so far in the year and perhaps with some outlook for the coming year. The insurance sector consolidation is moving on to the destination of December the 31st. ICO Insurance is looking to raise 20 billion naira extra via 4 billion shares sale at about 50 kobo per share. Mutual Benefits just concluded an EGM and a special placement of 8.8 billion shares, 4.8 billion naira from two investors. AXA Mansard just got a go ahead from the shareholders as well to do the similar capital raising, all ahead of the deadline by NICOM. Nana Akufo-Addo, congratulations, the incumbent president gets another 4 term in office. Inflation, however, is lower for Ghana. That came in yesterday. And from the Vetiva Capital's conference yesterday, the West African rating agency CEO says the French-speaking West Africa under the YMO will see mild recovery in 2022 on agriculture, retailing, merchandising as well. That's some of the pretty stories. Let's go to the banking sector, which is the first story. Akintunde Sulaiman, this Fitch Ratings report, let me start with you. What's your take on it, on the state of the banks?
Thank you, boss. I think it's no surprise that any economy that depends on oil will take a beating, and it will trickle down into the banking sector due to the pivotal nature of the banking sector in every economy. So if you look at the rate of loans that have been given out to the banking sector is about 32%. Sorry, to the oil and gas sector is about 32%. That's like the highest loan across, across every sectors in the economy. And if you look at the non-performing loan at that level, it's tilting to 22%. Of total non-performing loans in the sector. So, and with the oil and gas, with the oil and gas, the energy sector taking the beating it has taken this year due to impacts from COVID and initially the trade war that was going on between China and America. So the anticipation is if that persists and with the second wave we are seeing with COVID, it only means that the oil market will remain depressed, and if it remains depressed, it means that servicing of those loans by oil companies, which is heavily, which has been, which the banks are heavily invested in, would spike. And when those non-performing loans spike, it means performance of the banks will not be as solid as we expect. So I mean, really, it's no surprise. I think it's everything we have been looking, we've been anticipating. But with the advent of the vaccine and with economies widening and industrialization improving, we expect that this might prove some sort of support to the banks, and hopefully this would tide down the impact, the negative impact, the pessimism that we're having towards oil.
Okay, Joshua, as a banking analyst at Vertiva Capital, we spoke yesterday evening, and you said this report was bearish. And I saw on Bloomberg this morning that report that yes, profit for banks and all that is being pressured, as it were. What do you make of all of this coming through?
Well, I think so. Akintunde mentioned a few things there, but also we have to remember that the truth is, these banks have been here before. I think I mentioned that as well, that, during the previous oil price crash, that was when we saw pretty significant provisions and a pretty, big hit to the banks and their profits. But the banks were still profitable. In fact, I think year on year, overall profits did not decline too significantly during that 2015, 2016, 2017 period. And, right after that, there was a bit of a bounce back. So the truth is, the banks have learned from that. Firstly, what they first began to do was, they had to look at their foreign currency loans, because a lot of these oil and gas loans were in dollars. And, obviously the crash of the oil, of the price of oil sort of affected, companies' ability to pay back, and especially to pay back in dollars when there was that first, big depreciation of currency. Now, obviously, all that has not really repeated itself. Instead, the banks have been a bit more proactive and looked at it from the other angle, which is that if they take a net open position that is a bit longer term, then every time there's a devaluation, their revaluation gains will sort of boost their non-interest income. So yeah, sure, there will be some effects to income, to ability to pay back, and there might be some need for provisioning. However, that provisioning these days is, because of the restructure, has sort of not only been delayed, a lot of it has been converted. So the provisioning will be a lot higher and have a bigger impact on their profits if it was still in dollars, because every time the dollar is revaluated, then they would have to provide even more. However, in this current situation, that is no longer the case. So all of these things will sort of serve to sort of lessen the impact. Not too much, but definitely enough that profitability is not too greatly affected. Now, I think there are still other, wider effects because of the fact that government securities are still trading at, almost negative levels at this point. And so these will have an impact on, banks' ability to generate some non-interest income. But overall, even though the lending to the oil and gas sector is still high, it's not as high as it was, number one. It's definitely the NPLs from that sector are not as high as they were. And that's because having this sort of steady $45, almost $50 per barrel level is not too bad for the companies. So they should be able to at least make some repayments. As for what will happen next year with regard to, any kind of increase in demand. As long as there's no big crash, I think that the banks will sort of be able to squeeze through. Because if there was a big crash to like what we saw in 2015, 2016, where you see $20 per barrel or something like that, then we could start to worry. But if it stays at these levels or inches up a bit, as more people take the vaccine that's being rolled out slowly, by the second half of the year, we might even see a bit stronger oil prices. Maybe not from increased global activity, but at least from increased demand from like the likes of China, as their economy opens up and they start to stockpile in anticipation of the prices going up further down the line.
Okay, we're just going to be trying to keep hopeful. If there's a vaccine, it looks like everybody's coming up with its own version of the vaccine right now. And everybody's looking for where to buy. We may have to buy the Chinese brand or the Taiwanese brand, whatever brand we get. Just make sure it's safe. The Russian has a version, whether it is Moderna, whatever. Just get a vaccine and see. Perhaps the tourism industry, the aviation, commercial aviation, and a few others, hospitality will recover a little bit. As you speak about oil demand, perhaps that will help fire up the global economy a little bit with some optimism. But let's just leave it there for now. I'm sure I'll ask Ali about the banking sector in Kenya. You spoke about that earlier, but let's touch on Southern Africa, where the economic data are coming through after we got the GDP analyzed numbers just 2 days ago. Yesterday, inflation came in 3.2% from 3.3 previous. I'm surprised the business confidence index is rallying nearly to the 100, about 94.3. Fraudulent jobless claims, 3.4 billion rand recovered. That's quite some good news there for the South African authorities to get that. AstraZeneca vaccine still months away from efficacy as far as news is concerned. In corporate news, Tongaat Hewlett selling the starch business to Barloworlds for 5.2 billion rand. Bank of Namibia left interest rate is repo rate unchanged 3.75%. And finally, Zambia saying goodbye to the IMF officials led by Abebe Selassie, who is the head of African department at the IMF. Edgar Lungu's administration wants some support here because it looks like things are really tough in Lusaka. Ali, you want to start from Lusaka?
Yes, so, obviously everybody knew that the situation was very tough in Lusaka. They've defaulted on the Eurobond. They had been fending off the IMF. The impression was that they were trying to avoid going to the IMF before the election because of conditionalities that the IMF would impose. But clearly this announcement that they've reached out to the IMF is significant. The question is, have they made enough concessions to get the IMF involved? It will be a constructive signal to the markets and for the currency if they can find a way to thread the needle with the IMF. So, what I think is important here is that there has been a rapprochement and that the IMF is engaging with them. South African November inflation at 3.2%, reasonably benign still. Business confidence rallying sharply to 93.4. My view is that that's all about the international upswing that we've seen, the improvement in the rand, the sense that the global economy is not getting worse and is kind of stabilized. And I think that's all supporting the South African business confidence perspective. And also, there have been strong areas within the economy, particularly the agricultural sector. And then finally, Bank of Namibia keeping the repo rate unchanged at 3.75%. This, they largely track what happens in South Africa, and they were downgraded recently. The economy is in a very tough space, and I think we've got to keep an eye on Namibia to see how they navigate what are very choppy waters at the moment.
I'm just trying to understand the whole issue around Namibia. It is not often talked about. What really is the underpinning of this economy there? Any idea, Ali?
So, the main core underpinning is mining historically. Then you've got tourism as well. But really, it's been a mining story, and they've been struggling now for a number of years, and at the moment, it's also hurting the ruling party, who in the local elections had their worst performance since independence. The question is for them is, what kind of policy room do they have? I don't think they've got much at the moment. And really, they need to now intervene within the economy. They're looking particularly at the farming sector as a place to intervene. But it's a tough space for Namibia.
It's a tough place for Namibia. Thank you, Ali. Let's do the final crossing to North Africa, where Egypt is busy buying up hedging contracts for crude oil, eyeing what you call volatility in prices still ahead. Morocco's issued the second Eurobond for the year, $3 billion in 3 installments. It looks like the appetite for Eurobond in North African space is much bigger than Cote d'Ivoire's 1.6 billion. Tunisia's energy trade balance deficit down 37% to 3.974 million dinars in the 10 months. Of course, yesterday's Vertiva Capital's macroeconomic outlook for 2021 dwelt extensively on North Africa and Tunisia, as well as Morocco and Egypt actually stood out. Akintunde, do you think Nigeria should buy crude oil hedging contracts just the way the Egyptians are doing?
I mean, it will be wise. Volatility in the energy market is high. Uncertainty is quite high. Nobody really knows what is going to come into play in 2021. In 2020, early 2020, we were still trying to settle the impact of the US-China trade war, which was still lingering on. There was a first pact signed, and the market became quite optimistic. Then COVID hit us, and we are here today. So I think it's going to be a wise decision if we could have a sort of edge which will protect our prices and the benchmark, which would obviously accrue more, revenue and shorten the loss that we might accrue over the years, and which will serve as a sort of cushion to the government in developing the economy and instilling those most needed infrastructure across the country.
So, Joshua, look at this relationship between Zambia and the IMF, asking them to come in for discussions. Nigeria has been having conversations with the World Bank since the year started, and nothing really has been coming out of it. Is there any likelihood, as we look at the final two and a half weeks of the year, that anything is likely to come in through before the 1st of January?
I think the chances are slim to none, simply due to the fact that, the contrast between Nigeria and Zambia is Zambia are sort of more open. They are open to, I wouldn't say suggestions, but to definitely listening and, trying to fulfill the requirements in order to get funding from the IMF. We already know that the World Bank have been very clear on what they want from us. They want a freer and open FX market. They want to be investors to be able to enter and exit the market, based on market forces. Let the price fluctuate like it should in a normal market. Obviously, the movements in the I&E FX window have sort of helped. I mean, earlier on, we got a little bit this year, but the truth is we're not going to get that 3.5 billion that we're asking for without, something close to a full deregulation of that market. And we know that the CBN are not on board with that. We know that the federal government are definitely not on board with that. Unfortunately, in the process, they are actively pushing the disaster, I think, down the road, because that's where the real issue is.
Are you salivating Morocco's $3 billion Eurobond?
Sure. Okay, so now you see, the thing is, with all these Eurobonds, obviously the fact is, a country like Morocco, a country like Egypt, even Kenya to some extent, all these countries, if they come out with Eurobonds that have, fairly decent yields, this is a great investment position for not just international investors, but any local investor in Nigeria that can get their hands on Eurobonds like that would, be salivating, like you said, because it gives them such a great position going forward. Because any kind of revaluation to our currency will just bump up the value of those Eurobonds, instantly. And that's part of the reason why, we have to keep on looking to deregulating our market to attract investors. Because if we're to put out a Eurobond, sometime next year, the truth is this kind of risk will be priced into Eurobonds, so it might be even more expensive, for the federal government.
Okay, quick one, Ali. I can say you're going to wrap it up for us on the side of yesterday's treasury bills. What do you think the central bank or the DMO is up to with this on the 364-day paper that the yields tend to be climbing? Ali, the North African story between Egypt and Morocco, it looks like it's now gone down to a competition of who can outdo who in terms of being the best investment destination.
So I think, what it's telling me is that the Eurobond market has opened up for stronger African credits, of which Morocco and Egypt obviously are considered that way. When I look at it, because of such low interest rates globally, the actual absolute rate is proving quite attractive. Though if you look at the spread with which these folks are issuing, they're having to issue at pretty high spreads over the equivalent developed market Eurobond. So, but I think this is an important signal that if you can get your house in order, you can tap the Eurobond markets in the current environment. With respect to Egypt's massive crude oil hedging contracts, of course, Nigeria should be picking up the phone to Egypt and hedging, because they're on the other side of the trade. You guys want to lock in a price to protect your income, and Egypt wants to have certainty on the price for next year. So you're probably perfect counterparties for each other, in my view.
Thank you. Finally, Suleiman, on the bond market, what's the DMO up to? Is the train making a U-turn?
I mean, I don't think anyone would say that wasn't surprising yesterday. It was quite surprising. Looking at the 364-day paper, moving from a 0.15 to a 3.2. That was a significant move. But if you look at the bid to cover ratio in the papers, you see that the 364-day had the shortest bid, because it settled about 1.1, where the 182-day 1.1 times, where the 82 days settled about 1.6 times, and the 91 days settled about 10.9 times. So you see that investors were not really bullish at the long end, because the uncertainty in the fixed income market remains. Everyone still seems to be waiting for those special bills. So a lot of people were not bullish at the long end. They were just bullish at the short to the medium term, and the CBN needed to allot those bills at the very long end of the curve. So what they needed to do was make it attractive. But what this will lead to is a panic, and we'll just see some sort of misbehavior in the market. You see a lot of sell-off going on today, and a lot of people will be trying to offload, because people have been buying at the long end, anticipating that there will be a further decline in yields, which we've been seeing over time. But yesterday was a surprising one. And this, I think, is part of the play as well of the Apex Bank to float the special bills, because I wasn't anticipating the special bills will come in at those ridiculously low rates. But since as of now, we're seeing the long end of the maturity at 3%. We expect that when they issue those special bills, they'll be going about the same range, or maybe a bit more premium than what we see. So liquidity persists in the market, and we'll be anticipating that going into today's trading and tomorrow's trading, a lot of sell-off will occur. So we'll see more liquidity in the market. Then next week, we will see a lot of inactivity in the market, because people waiting at the sideline, not sure of whether to go in or when not to go in. But for certain, what we'll see is that yields will start spiking in the market today, and this as well can portend opportunities to buy in, because all we'll be doing right now is active trading and speculations, because no one really knows the direction, no one knows the mindset of the Apex Bank just yet. Yesterday was a one-off. If it persists into the next trading session, which is coming up in about 2 weeks, then we'll know that yields are here to start rising. But for now, there's still a bit of uncertainty, and the CBN needs to come out to put some sort of clarity on what when the special bills will hit the market, and how we can play in that space.
Okay, I think everyone should just fasten your seatbelt, just prepare, don't move too much around the cabin, and just enjoy the flight. Let's see how it goes. Thank you so much, Akitude Sulaiman from Greenwich, Joshua WC, thank you from Vetiva Capital, and of course from Nairobi, Alikan Sachu. Thank you so much, this founder and CEO at Rich Frontiers Management. Good day, everyone. Have a great day, and let's get back together tomorrow, Friday, to continue from here. Thank you. We appreciate it. Bye for now.